And I'm joined by Diane King Hall. And we will navigate through some excitement here on the floor of the New York Stock Exchange. Good to see you, Diane. You have some names like Norwegian Cruise Line that you're talking about.
Yeah, indeed. And it's nice to be able to feel the positive energy happening with the IPO for Beta Technologies here on the floor. And it's nice to, see some IPOs still happening even amid the shutdown. All right, so we're looking across Norwegian Cruise Lines. You had some mixed numbers here. So they missed expectations on revenue. They beat expectations on the bottom line, but investors clearly worried about that miss on revenue and what demand looks like. Are people still cruising? Royal Caribbean has been outperforming in this space. Norwegian has been an underperformer, and you're seeing that lag continue today with shares under heavy pressure out the gate. Today down another 8.5% or more than 8.5%, so extending its losses year to date. Adjusted EPS coming in at $1.20. The street was looking for $1.16. Revenue $2.9 billion. The street was looking for more than $3 billion. So again, mixed performance there. Ships are still full. Occupancy is at more than 100%, which is above expectations. But again, it looks like the revenue gap is because lower participation, they mentioned, in their air travel programs. A lot of times they'll have these relationships where guests book on their airfare through Norwegian. That lowers both revenue and other costs as a result of that. The cruise boom, investors are clearly worried about this now, given their performance on this one. The stock had already been lagging the S&P 500 year to date, so investors clearly cautious on this sector after you'd seen some strength before now across the sector. But again, Norwegian continuing to be a laggard.
And it's interesting here. This is really seeing a sell-off here, even though it set a revenue record, right? Mm-hmm. I mean, it's still down almost 9% now as we speak. What about Spotify?
So this one's an interesting one because it did beat expectations. It's been a strong outperformer, and the indication in the pre-market was that Spotify would open higher. So there could be potentially some profit taking here off the back of its quarterly results because it did really well. It delivered on both beats on both the top and bottom line, beating expectations on user growth as well, on EPS, 3.28 for €1. So that beat expectations. Revenue coming in above €4.25 billion. So again, that was better than expected. We have the conversion obviously to dollars right there. Monthly active users, 713 million. So that topped expectations. Premium subscribers, that climbed to 281 million. Ad-supported users, you saw growth there as well. So that's that tier, that uses Spotify with ads. That hit 446 million. So growth is broad-based for Spotify. That's what shows up. It shows that users like both the mix of music, podcasts, just overall audio options within the wheelhouse there. They're bringing in new listeners. The guidance for the fourth quarter, they're guiding for between 4.5 to 4.57 billion euros. Some of that was currency headwinds affecting their guidance, but user growth guidance is still strong. Analysts are projecting that we'll see another price increase potentially by early 2026, so that certainly could expand margins. But it is interesting to see the reaction today, and maybe that's because of the broad market weakness that we're seeing Spotify shares selling off. That was not the indication in the pre-market, Nicole.
And look, I mean, at this point, sometimes you'll have good numbers and still see a sell-off because that's just the way the market's going with the Dow Jones Industrial Average down 455 points. This is the biggest sell-off we've seen in almost a month for the S&P 500, for example. You have one more here, Shopify, right?
Yeah, so Shopify, adjusted EPS coming in line. So bottom line coming in line with expectations at 34 cents a share. Revenue beats expectations at $2.84 billion. The street was looking for $2.75 billion. So again, revenue beating, climbing 32%. Merchants are selling more through the platform. Now, again, shares are under some pressure. That stock has been a huge outperformer so far this year. It's up more than 60% in 2025. In terms of its outlook for the holiday quarter, they are expecting revenue to grow in the mid to high 20% range. So that's essentially either in line or a little bit better than expectations. Management is guiding for gross profit growth in the low to mid 20% range. So that suggests steady expansion here. The company is investing in AI, who isn't investing in AI, Nicole. So they're expanding. They also mentioned expanding with larger enterprise clients and international markets.
All right. Well, thank you. Diane King Hall, a good look there. 3 names to watch. Also, we're seeing the selling underway, the Dow, the Nasdaq, and the S&P.